When I first started trading, I only knew how to go long. And once you've been starting to trade for a while, there is a moment in time when you realize you'd like to go long and short at the same time without closing your positions. By the end of this video, I'll show you the button on Bitunix exchange that lets you do that. So the name of the function is called hedge mode, and it means you can hedge your positions for both long and short. So let's dive into that. So you're going to log into your Bitunix account. If you don't have one, we have links in the video below and it's got some really cool bonus sign up, so just check that out. So once you've signed up and you've deposited your crypto, what you need to do to find hedge mode is go over to your futures account, and then you're going to click this wheel setting up here. You're going to scroll through the different functions. And here you've got one-way mode. So this means if you had a long position open, you can't open a short at the same time. It will actually decrease your long position if you tried to do that. So the best thing to do is switch it into hedge mode. You need to have no positions open when you actually do that. And that means then that once you open a long, you can also open a short at the same time. I want to show you a quick example on a chart of where you might do something like this. Here's a recent example. So Bitcoin was hovering around the 90,000 to 100,000 mark. It hadn't quite hit 100,000. I can't even believe I'm using that number at the moment, but here we are. So Bitcoin was consolidating in this triangle, and the price action was pretty choppy, and it really could have gone either way. And this would be, I didn't actually take this hedge, but this would be a good example of when you might want to do something like that. So at this point in time, we were consolidating under the high of the week, and this is the TBD trade by design system. I knew that there was a little bit of resistance here. You could have set up a short in this position, and we did have liquidity down here, the 1 month liquidity. So that would be a perfect example of setting a short with a very tight stop on it. And if you were, we had some nice setups here where it looked like it wanted to break out of the triangle. Whilst you were in your short position, here we had some nice bullish candle action at the base of the triangle. Here's where you could have actually taken a long, had a clear invalidation point at the bottom here, and the target would have been up to this 7-day liquidity. How do I get that liquidity? The trade by design system has these awesome heat maps, and I can lock in 12 hours. Let's have a look on the charts where that is. On the 1 hour chart, I can see there's a lot of liquidity up here, which I've marked out, and there's liquidity down below this price region. So it was a situation where it really could have gone either way, and there were two lots of liquidity that were targets for the market makers. So there's a great example of hedge mode. It's not something traders use all the time, but only at certain times in the market to hedge their bets and to see which way the market wants to show their hand. The trade by design system that I'm using today is actually a community I'm involved with, and the link is below if you're interested. There's an information video, and Bitunix exchange with the hedge mode tip. There's also a link below. See you next time.